My name's Nate. Welcome to the Div Man channel. Today we're talking about how to generate a yield on your Bitcoin through Bitcoin covered call ETFs. So, first Bitcoin, we've got Bitcoin at $102,000 an exchange rate. So one Bitcoin costs $102,000. And over its lifetime, it's almost 1,000,000% increase against the US dollar, which is pretty impressive considering it's software. So it's a very, very expensive piece of software, we could say. And if you look here on the short and the long, it happens to all be green. And we can basically thank Donald Trump for that. And when you see it priced in gold, it's the only real asset that really just puts gold in its corner. I mean, if we look conversely at, for instance, the S&P 500 since its inception in the 1870s, it only has increased something like 64%, if I'm reading this chart right, against gold since the 1870s. So if you don't value the S&P in dollars but in gold, it's only increased 64% over not quite 200 years, but we're heading in that direction. So here we have a test folio of the major Bitcoin covered call ETFs. So YBTC is Roundhill, YBIT is YieldMax, ARKA is ARK Investments, and then BITO is ProShares. And a while back, these funds mostly, except for maybe ARKA through ARK Investments, all did covered calls on BITO. And BITO did covered calls on Bitcoin futures markets. So I guess there's some regulatory stuff that's hard. So they were just using BITO, that is YBTC and YBIT were both using BITO. And BITO was using a futures market, which is itself a derivative of Bitcoin. So it's not direct. So in the past few weeks, I believe YBTC, if not YBIT as well, have switched from using BITO, which is itself using Bitcoin futures, so it's like less steps in between actual Bitcoin price movement and their ability to generate revenue. So they're starting to use the spot Bitcoin ETFs, I believe. I at least know that YBTC is using spot Bitcoin ETFs. Nevertheless, here we have the results of what happens when you backtest these ETFs for total return. Now, this is with DRIP turned on. You see how I have invest dividends turned on here. That means every time we get a dividend, we are not using that as income to spend in our wallet. We are just throwing that back immediately once it settles into the fund. So it's supposed to snowball and appreciate in that way. And you can see here the results are BITO is the champ. If you turn on DRIP or dividend reinvestment, you end up with an initial investment of $10,000 turns into $14,000 today. That's between today's date and April 23rd. That's when the youngest of these funds was introduced. I believe it's probably YBIT, if not YBTC. Can't really remember who started the most recently, but as you can see, this chart here shows YieldMax being the underperformer here. YieldMax is the least performing asset if you reinvest your dividends. Now, the picture does change if you turn off dividend reinvestment. If you turn off dividend reinvestment, what do you have? Slightly different picture, because then all of a sudden, the whole reason I'm including ARKA, I normally wouldn't use ARKA as a fund to even look at here, but they do pay a decent dividend. The majority of it is like a year-end dividend, and they're a fund that uses futures in order to generate that price movement match for their fund and a little bit of revenue. So As you can see, if you turn off dividend reinvestment, if you're just going to collect your dividend money each time they pay out, the best fund to invest in as of now, since inception, would be ARK-A. They end up with $10,081 of principal invested in the fund without you having to put a penny back in. So basically, you're flat for the NAV if you use ARK-A. The second place person in this race, if you do not reinvest dividends, is YBTC. That's the Round Hill Fund. And the cool thing about those guys is they recently started to pay weekly. And I know there's a lot of hate on the internet about weekly pay versus monthly pay, but I like getting paid every week. I wish my regular job paid me every week. So I'm a big fan of the Round Hill 0 DTE funds, RDTE, XDTE, QDTE. I love all those funds. I'm starting to think about XPay, though I don't really have a situation that would work for XPay. And then the second place third place, I should say, is BITO if you don't reinvest your dividend. And then the last place is YBIT. You end up with almost half of your original $10,000 principal if you use YBIT gone. From the NAV, at least. I mean, hopefully it ended up in your pocket through the dividends. But that NAV decay is kind of sad. Let's look at that chart here. Here's the chart. What do you think that red one is? That's the Yield Max fund right there. And here we have BITO. Here we have YBTC. Here we have ARK-A. So, I'm slightly curious what ARK-A's actual dividend yield is to see what the percentage-wise is, because I imagine it's got to be the lowest yield of the bunch. So it looks like, according to Seeking Alpha, you know, assuming that they've got their numbers right here, it looks like a just under a 30% yield, so high 20s yield. Whereas BITO, I'm guessing that one's going to be high 60s, something like that. Let's see what we've got with BITO. BITO is about 60%. I was right. I bet YBTC is also going to be up there. Yep. YBTC and YBIT, the Yield Max fund, is also at 60. So these funds are pretty intense for their well, I mean, the yield is really high, and the ability to maintain the NAV if you don't put at least something of these dividends back in is probably just not there. You're probably not going to be able to maintain your capital because it's paying the price of the dividend out of the share price. So whatever the dividend is, it's going to wolf that up. Hopefully they've appreciated enough through their calls and whatnot to be able to keep that NAV itself. But most of the time, there's going to be a little decay if you do not throw some of your dividends back in. So this is one way to generate some income from Bitcoin in order to not just have your Bitcoin sit there, but to be able to make some money. You could even live off of this. You could use this to buy Bitcoin, although I imagine it's not going to be quite the same capital appreciation as if you bought Bitcoin itself. But this does allow you to like buy in a retirement account if you have a self-directed IRA or Roth IRA that you can buy specific ETFs or stocks. You could buy some of these funds. Most likely your ETF, your broker or whatever will allow you to do that. So some cool things to do to be able to make some money, have some exposure to Bitcoin, and then shift a little bit of the capital of what's gained when Bitcoin inevitably increases in price into something else, maybe something safer like a S&P 500 fund, or maybe you want to do something more along the lines of a bond ETF to like preserve your capital. Any of those directions would be totally fine. This video is basically just meant to help you know what's out there for the Bitcoin ETFs. And one final fund I did not mention, I'm not a big fan of it myself because the expense ratio is so high. I think it's like 6%. So the ETF provider is like wolfing down 6% of your capital every year. Hopefully, most likely it's going to increase more than that. So you're probably not going to lose, but it's just such a high expense ratio for it. But it's Maxi provided by Simplify. And I don't have the ability to test for it on Testfolio because it only allows 4 comparisons at once. But it looks like, let's see what the total is if we include Maxi using this back tester. All right, so total return, they end up with 34% total return. That looks like it puts them third. So BITO is 1, ARK A is 2, Maxi is 3, YBTC is 4, YBIT is 5. So just some things to think about, and some ways that you can be able to just get some of your Bitcoin exposure as income instead of it just sitting in a cold storage wallet or, heaven forbid, on an exchange. Hope this video was helpful. Please like and subscribe. Share this video if it was helpful. Thanks for your time. Bye.